So, wow, Zomato had a board meeting, huh? Looks like they've been busy crunching numbers for the quarter and 9 months ending December 31st, 2024.
Yeah, it seems like it. They've released their unaudited financial results, both standalone and consolidated, and it's all been reviewed by Deloitte. Pretty standard for a listed company.
Right. And they even had a limited review report from the auditors. It's always good to have that extra layer of scrutiny. Keeps things transparent, I guess.
Exactly. It's a way of ensuring everything's above board. I mean, it also helps that the info is available on their website, for everyone to see.
Transparency is key in today's world, especially with how much scrutiny big companies like Zomato are under, right? So, what's the gist of this financial report?
Well, a lot to unpack actually. But let's start with the consolidated results. They've got a bunch of subsidiaries like Zomato Middle East, Tongeston Food Networks, and even a Foodie Bay Employees ESOP Trust.
Okay, so it's not just the Zomato app that we see, but like a whole ecosystem of different entities working under the same umbrella. It's almost like a corporate octopus.
Yeah, kind of. In total, there are 21 subsidiaries and one trust in the mix, and their financials are part of the consolidated results. Now, it's important to note that not all of these have been audited.
But yeah, so some are unaudited financials, which makes you wonder about, well, the reliability of those numbers, right? Does it affect the big picture though?
Well, the auditors specifically mentioned that the unaudited financials from the subsidiaries aren't material to the overall group. So that's a relief, actually. It's like if you're baking a huge cake, a few sprinkles don't really change the overall flavor.
Okay, that's a good analogy. So let's get into the actual performance. What does the report say about their revenue and profits for this period?
All right. So for the quarter ended December 31st, 2024, their consolidated revenue from operations was around 5,405 crore rupees. Their total income, which includes other income, was 5,657 crore rupees, and they made a profit of 59 crore rupees.
59 crore rupees profit? That's pretty good, right? I mean, given all the talk about food delivery and quick commerce being so competitive and all.
Well, yeah, it's a profit, but it's a pretty slim margin actually. And remember, that's just for the quarter. Their expenses were quite high, like about 5,533 crore rupees.
That's a lot of expenses. Where's all that money going? I mean, what's their biggest expense?
Well, purchases of stock in trade is a big one, costing them 1,710 crore rupees. Delivery and related charges are also pretty high at 1,450 crore rupees. And of course, employee benefits are also up there at 689 crore rupees.
Okay, I mean, delivery costs, that makes sense. It's the heart of their business, really. But employee costs are up there too. There's probably the tech people and all, right?
Yeah, probably. They've got a lot of staff to manage. They also have things like ad spend at 421 crore rupees and other operating expenses around 1,830 crore rupees. All those small things add up.
Wow, those are some hefty figures. So it's not all smooth sailing, even with all that revenue they're making. What about their different segments? How's each part of the business doing?
Okay, so they've broken it down into India food ordering and delivery, Hyperpure supplies, quick commerce going out, and other segments. India food ordering and delivery had a revenue of 2,072 crore rupees.
That's still their bread and butter, I'm guessing. It's what everyone associates with Zomato, the app we all use.
Exactly. Hyperpure, their B2B business, is also doing well with the revenue of 1,671 crore rupees. Quick commerce, the Blinkit side, made 1,399 crore rupees in revenue.
All right, so Hyperpure, that's the farm to fork supply chain, right? So like Zomato providing raw materials to restaurants and Blinkit is the grocery delivery bit, right?
Precisely. And then there's the going out segment with a revenue of 259 crore rupees. That includes dining out and entertainment.
So all segments seem to be growing. Any standouts? Or is everything pretty balanced?
Well, the food delivery segment is profitable with 432 crore rupees, but quick commerce is still running a loss of 30 crore rupees for the quarter. It's like the food delivery is the reliable old engine and the others are still gearing up.
So quick commerce is still trying to figure itself out, huh? I guess they're still in the investment phase there. I mean, it takes time to get these new ventures to profitability, right?
Exactly. It's like, planting a tree. It takes time to bear fruit and these things don't happen overnight. Speaking of losses, There was a lot in the shareholders' letter about it.
The shareholders letter. I was just about to ask about that. So what juicy details did that one reveal? What's the big news there?
Well, they talked about their gross order value, or GOV, for their B2C businesses, which grew 57% year on year. But more interestingly, they addressed the increased losses in quick commerce.
Okay, 57% growth in Gove sounds good. But what's up with quick commerce losses? I thought they were aiming for break even.
Yeah, that was the plan, but they've accelerated their growth investments. So basically, they're building more stores and warehouses much faster than they originally planned.
So it's like they're pushing the gas pedal in quick commerce. That's why the losses are more than expected, right? That could also explain the increase in expenses.
Exactly. They're saying they want to reach 2,000 stores by December 25th, earlier than their earlier target of December 26th. So, it's a strategic decision.
That's an aggressive move. And I guess it's a bit of a gamble, but they must be confident, right? I mean, there's a lot of competition in quick commerce. Everyone wants a piece of that pie.
Yeah, they mentioned that the increased competition has led to a pause in margin expansion, but they haven't seen any major customer attrition. They think that's a good sign.
That's a pretty crucial point, If you're loyal customers, it makes the business much more resilient. So, what about the food delivery business? Is it still a big revenue driver?
Oh, absolutely. Their food delivery GOV grew 17% YoY, and their adjusted EBITDA margin improved to 4.3%. It seems like their cost efficiencies are paying off.
That's good to hear. 4.3% margin. That seems like a pretty solid improvement. And it seems like they expect it to stabilize at around 5% in the next few quarters, right?
Yeah, that's what they're aiming for. And they also talked about their delivery partners and their focus on providing flexible earning opportunities.
That's important. I think it's great that they are focused on their partners since they are the backbone of the business. Okay, so where are they looking at for the future, like the next steps?
Well, for going out, they've launched their district app and are working on expanding the selection of experiences. They're also trying out quicker deliveries for restaurants, and they mentioned Zomato Instant.
Zomato Instant. I remember that experiment. It didn't work out for them, right? So now they're trying something new with Bistro, right?
Right, Bistro by Blinkit. They are testing it in the office market for now. And they're also enabling restaurants to offer less than 15-minute delivery. So it seems like quickness is the theme.
Okay, so they're not giving up on the faster deliveries. I guess it's about figuring out the best way to make it profitable, balancing speed and cost.
Precisely. Also, they highlighted a significant increase in their cash balance, mainly due to their recent QIP, which, is a good thing.
Cash is king, as they say. So it looks like they're set up well for next phase, I guess. Any last big takeaways from this report?
Well, they did mention that employee costs are expected to remain elevated in the near term. So they are investing in talent, and I think that's a positive long-term strategy.
So a mixed bag, but with a clear path forward. They're definitely playing the long game, it seems, focusing on growth and profitability. Okay, I guess that's pretty much everything from the report, right?
Yeah, I think we've covered most of the important bits. They've got a lot of moving parts, but they seem to have a clear strategy, even if there are some short-term bumps.
Definitely. It's a lot to digest. Hey, if you're listening, make sure to like, share, and subscribe to our channel for more in-depth dives into the world of business. So, any other thoughts?
Well, they've got some GST issues as well. Some orders they've received related to tax on delivery charges. The amount is around 420 crore rupees. So that's something to keep an eye on.
GST issues. Those always seem to be a headache for businesses. But they're confident, right, based on expert advice. So fingers crossed, right? So I guess that wraps up our discussion.
I think so. It's clear that they are investing in growth, focusing on expanding their business segments and navigating a highly competitive landscape. It'll be interesting to see how things play out.
Yeah, definitely. It's a dynamic market. So it'll be fascinating to see how they adapt and grow in the coming quarters. It's like watching a story unfold.
Exactly. And it's not just about food delivery anymore. They're expanding to quick commerce, going out experiences, and even trying new things like Bistro. It's like a restaurant chain trying out different cuisines.
Okay, great insights. Thanks for breaking it down so well. always insightful to see how these big companies are doing and the challenges they're facing.
No problem. It's always fun to dig into these reports and see what's cooking. I mean, it gives you a glimpse into the complexities of running a huge business.
Absolutely. Well, until next time then. And remember, folks, keep your eyes on the numbers and we will be back to break it all down.
Sounds good. And thanks for joining us, everyone.